Hey, Steve and Andy, what's up?
Hello, Scott. Thanks. Hello, everybody. Happy Tuesday. Hello, Andy.
Hello, Steve and
All
Scott,
right.
and I believe I hear Rudy back there somewhere.
Yeah, I got the whole gang here. So, hey, everybody. This is the normal trade of the week, Tuesday, 5 p.m. I'm going to help talk about some things, and Andy's going to help out in the questions box there. So, I see a couple of people have already chimed in and said hello. Let's go ahead and get started. The trade of the week disclaimer, just reminding you guys that we're a software as a subscription company. We are not registered investment advisors, so anything you see or hear today should not be considered or construed as investment advice. It's just our opinions, and we're going to showcase some of the technology as well. That being said, you're never alone with trade ideas. Again, I know a lot of you might be kicking the tires on the test drive week. Every single week here, we've got a lot of concierge onboarding services to try and get people up to speed on a very in-depth program that's 14 years old, that is trade ideas. And starting with Barry's room, the live trading room, Monday through Friday, from bell to bell. Barry is in there with about 500 people, with a handful of other people who kind of help take the lead and in the pack hunting of looking for stocks and setups for what they're doing over there. But the best news is that's a really high quality room, in my opinion, and it's free. So a lot of rooms out there at this level, are charging a lot of money each month, maybe 70 or 99 bucks. But under the ecosystem of trade ideas, Barry runs a pretty good ship over there. Very knowledgeable of our program, very knowledgeable in the market, and helps people understand what is good to use and what's not
Muted.
and how to solve problems, how to use technical analysis, whatever you need. It's a great place to at least show up and start learning through osmosis. Monday through Friday. We also have the afternoon webinars, which you're seeing right now. This is the Tuesday edition. Talk about the trade of the week that goes out in email. Will be part of the content today. Monday through Thursday, we have dedicated webinars at 2 p.m. Eastern. And then down here at the bottom, you see something that says Friday support session. We don't have any dedicated webinars on Friday, but we open up the go-to webinar like we're doing right now for 3 hours every Friday from 11 to 2 Eastern. Come one, come all. Again, it's free, of course, and help people pull up a chair, ask questions, and try and get some visual help and get what you're looking for, whether it's technical help or trading help, or more importantly, how to set up a scan maybe and how to use the program to find what you're looking for. So that's every Friday. And then also back during the week, during the regular session, not on a test drive week, we have what's called the Trade Ideas University. Start off on every Monday with the pretty basic, simple stuff with Sean and Andy. And that travels through Tuesday, Wednesday, and Thursday and finishes up with Jamie on Thursday going over some more advanced topics. We do have a recorded version. If somebody's interested in that, you can let us know. We can drop that in the chat, or you can email info@trade-ideas.com and request the recorded Trade Ideas University. But that's a great way, again, for newer traders, because it restarts every Monday, and get into speed, get in the jump rope, so to speak. All right, so with all of those slides out of the way, just the theme and the reminder of our Tuesday webinars here is man and machine combined. The great quote from Paul Tudor Jones is, no man is better than a machine, and no machine is better than a human with a machine. So what that's saying is humans and machine can work really well together. Just by themselves, trying to let the machine do everything for you is not really the world that we're coming into. The brave new world that we're coming into is humans and machines working together, the machines, the AI, what have you, giving us a curated list of solutions, ideas, data points, and the human being is the one who's working off that master curated list. And so whether you're using a custom formula you've created at Trade Ideas or back tested, which we'll do a little bit of that coming up, or just relying on the statistical probabilities of the AI trades, that's man and machine working together. So that's our theme, and we're sticking to it. So today we're going to follow the formula, go over some market recap, what happened in the major indexes today. Andy has some thoughts about what happened, or what lack of happenings in Holly the AI today. Kind of an unusual day, but we'll touch on that. Trade of the week this week is the ETF IBB. We'll go back and check on the last few, kind of see how they're doing. I'm going to demonstrate a quick back test for the new for the new test drive users who are not aware. Maybe they've got something in their mind they want to refine down. You have access to this tool throughout the week, so we'll take a look at that. We'll take a look at sectors, maybe even set a few alerts, and then try and set some time aside for Q&A, because I'm pretty sure you guys may, the test drive people that is, may have some additional questions. As basic as they are, it's no questions too basic to throw out there. So we'll get started here. As we always do, we look at the S&P 500, and I think there's some people that were in the room yesterday when Jamie and I were looking at yesterday's data minus today's candle. And the theme yesterday, we really were discussing across the board, whether you're looking at the S&P or the NASDAQ here, is this looming 200-day moving average creeping up right above us here, flatlining as a matter of fact. So yesterday we talked about, we're so close that the price action is pretty much due for at least a testing, I feel, of this moving average across the board. And today we got one step closer, if not maybe even the closest. We'll see. But yet another day of 5 days of creeping higher. This market's probably ready for a little bit of a pullback. I would not be surprised to maybe see some sideways grinding underneath this flattening 200-day moving average. And then, as discussed yesterday, what eventually the bulls are going to want to see is a close above the moving average, ideally with a body that closes above the moving average. What the bulls do not want to see is an attempt to go through and then a big rejection intraday, closing kind of like so, with a daily candle, with what we would call kind of a topping wick there. That's not what really we want to see. The bulls are going to want to see maybe some sideways grinding and then moving higher and then posting closes above that 200-day moving average. Believe it or not, the Dow has already done that. So it's kind of quietly sneaking its way through. Look at that. They're posting another close yet higher above its flattening 200-day moving average. So maybe the Dow, which is full of transportation and some energy and some other basic industrials, is showing some light here, technically speaking, that it can be done. So the S&P 500 and the NASDAQ are going to need to look and do similarly to what the NASDAQ did to keep the bulls interested in this market. There's the NASDAQ, again, coming right up underneath that 200-day. I think this market's due for some sideways action. The IWM has a lot of space to go still between its respective 200-day, but focusing on the S&P and the NASDAQ, I think is the place to go, and that's where we hit today. So again, just to kind of reiterate, what the bulls want to see going forward is some sideways grinding and then an attempt to move higher. What the bulls do not want to see is a quick attempt to move higher, which is quickly reversed during the day, putting in some sort of a topping tail. So that's the scenario going forward here, watching these two things. We will touch on the sectors going forward a little bit later. So I'll save that because we do have kind of a lot to get to and want to try and keep some time for those that are interested in asking some questions today. So with that said, before I say hello to Andy, I will notice that coming into today, we had 3 segments. This is the main segment. There was only 3 strategies that made the list. And when I say made the list, it means they back tested well enough with these win percentage and profit factor scores that the AI put them, so to speak, on the starting bench today. And in this particular segment, nothing fired. So none of these players on the starting bench got into the game today. From Holly Grail. Now Holly 2.0, we actually had 2 trades and they happened to be 2 short sells. But once again, notice the very light testing scores that were coming into today. And then thirdly, again, Holly Neo had some trades, but also only 2 strategies made the cut coming into today. I don't want to step on Andy's thunder too much, but I kind of feel like a good handoff here is what we just talked about. This grinding higher 5 days of higher movement net change. This market's kind of due for a rest. It's hitting some major resistance points for whatever reason. Last night during the machine learning, I mean, trust me, we checked. We're like, guys, is this normal? And the guys who are in charge of watching the AI machine learning said, yeah, it's normal. The takeaway is there's just not much out there that the AI saw coming into today as having statistical probabilities. And my own personal feeling I'm adding to that is I think it might be this extended 5-day move here. We're just kind of running out of probabilities coming out of, back here we were coming out of a nice break higher, but you get to the point where you don't want to chase the train too far because the market is due for a pullback or some sort of consolidation. So with that said, I'll bring in Andy.
Okay, we're going to do this one before the market recap, or we're not going to do the market recap?
We just did the market recap.
Oh, okay, that was a quick one.
I'm sorry. Well, the bottom line is, again, for Andy, and the takeaway is we're parked under the 200-day moving average.
That's right.
And we need some sideways consolidation to push higher. We don't want to see a reversal wick. But that's really all I continue to see here. The last big hurdle is staring us right in the face, the 200-day.
Okay. My dog was bothering me, and I was trying to get him to leave me alone, telling him Daddy's busy. Yeah, go. Yeah, so yeah, but usually I can do that and come back, and you're still kind of rambling on
I
about the
understand.
markets.
Well, we got a lot to get to today, so I want to leave a little bit of
Right.
question time, Q&A time.
So real quick on this, guys, like many of you noticed, we were several hours into the market, and Holly had not fired off a trade. She did end up firing off a total of 7 trades, 5 from Neo. You can see Grell here was pretty much empty, no trades today. 2.0 had a couple of shorts, and Holly Neo had 3 longs and a short there. So overall up marginally, nothing to write home about, but you can see the market, pretty much gapped up today, moved higher, went to lows, back to highs, and then pretty much settled down in a spinning top. That was your kind of close for today. But I wanted to talk about a couple of things, because I know a lot of people on the test drive, and they're like, wow, what's wrong? Why isn't Holly firing anything? Well, the first thing let's look at is, as Steve was talking about, she didn't come to work with a lot to play with today. You can see very limited number of strategies make the cut. This is by far the lowest I've ever seen since we've added 3 Hollies, and it's somewhat of a phenomenon, I believe. And I'm going to show you another one today. Something I pointed out to the guys that happens very frequently. First of all, let's talk about where we have come from in the market. Okay, we've had a huge move down, and now we are extremely overbought in the market. Even though if you look at the long-term picture, we're nowhere near our highs. Going back to our December lows, we are extremely overbought. Well, remember, a lot of Holly strategies are based upon daily setups. Okay, even though Holly enters or fires off an alert and closes it out before the end of the day, a lot of them are built upon daily chart formation. And when you get this extreme overbought, a lot of the parameters are just so out of whack, like change in 5 day, just the parameters that you would use to set up your normal alerts. Well, we use a lot of those when it comes to Holly. So when you get this overbought, okay, it throws a kink in a lot of the strategies, and a lot of those parameters are just not, this is abnormal. It's very rare we get this overbought and bought in the market. And I noticed something else today that is very, very rare. It seems like it only happens about once a year. And I remember it was funny when I first started working for Trade Ideas. The very first month I worked, Barry went on vacation, and I filled in for him, and I actually capitalized on this phenomenon I'm about to show you. If you look at the spiders, we're talking about it, it's extremely over the bought. Well, I notice when we get overbought like this, I don't trade the VIX very often, or VXX, or now VXXB. But what I do like to keep an eye on it in extremely overbought conditions, because what happens is, remember, now we have the spiders extremely overbought. Well, look what happened today. The VIX came down, right, with the market going to highs in the morning. Let's take a look at the spiders now. Okay, gap up, VIX went lower. Well, look what happened here. The second time the spiders went to highs, VXXB, you had the VIX basically just hanging out near highs. So in other words, it was not going lower. No, as the market was moving higher. So now what you got to ask yourself, what would cause that? Usually you can see here, this looks just opposite of the spiders. When the market goes up, everybody's happy, fear comes out of the market, and the volatility sells off, VIX goes down. But now you have a case where Market went back to highs, and this thing just hung out. Says, whoa, that's enough already. So keep in mind that VIX is a measure of option buying on the S&P futures. Okay, so it's I'm not going to get into the I don't even know the formula, but I know it watches the put and call option buying in the S&P futures. So what may be going on right now? Well, the market's going higher. People are now getting to the point like, whoa, this is overbought. I'm going to start hedging some. You know, how might they hedge? They can go out while options are cheap and buy some put options on the S&P futures. Okay, so that is what this is measuring. So keep an eye on this. I remember the first one. This is the same thing that was happening when I first came on with Trade Ideas and was in Barry's chat room, and I actually did very well on buying some VXX at the time. Wasn't VXXB, but anyway, I wanted to bring this up because once again, this is a very, very rare phenomena. You know, I may see this once a year, and it just so happens that this is very, very rare what we saw in Holly today. So it's just interesting.
Rare moments.
Exactly, two very rare moments, you know, happening today. So
and kind of correlated. Holly couldn't see any opportunity, whether backtesting or in real time.
Exactly. So I am not telling everybody to rush out and buy VXXB. I'm just telling you what I have done in the past, and I'm not going to say I'm buying it or anything like that, but it's could be an interesting risk reward situation for you when you get this kind of overbought conditions, because typically the VIX will go down as long as the market creeps higher, but boy, didn't do it today. All right, Steve, I think that's about all for Holly. No sense in going over single trades.
No, it's a big picture. There was nothing to be done, and the canary in the coal mine told us to be careful today is basically the summation of it all.
Mm-hmm. Absolutely.
All righty. So I'll take it back.
Okay, or are you grabbing it, or you want me to send it?
Yeah, I got it.
Okay.
All right. So what I thought we would do is, again, check in on the trade of the week and maybe a few others. This market's just been grinding sideways. There's been no real giant movement in the market, nor in the individual names. But coming into this week's trade of the week, we went with, excuse me, clear my throat, an ETF, not an individual name. We're in the throngs. I think there's 1,600 companies reporting this week. And so sometimes in earnings season, you can look to an ETF, sector ETF, as a vehicle for trading. But technically speaking, the 200-day moving average is in play here on our trade of the week. It touched the 200-day there, it touched it here, and then came up to touch it again. So it's really banging on that line, and it looks like it may want to get through, even kind of, you know, an inverted head and shoulders here. But we love the look of the sideways action underneath a significant technical period, in this case being the 200. So, you know, today it did trigger. It got closed yesterday. It didn't trigger, but it's now active. And just like we were talking about earlier, what we would like to see is maybe a couple of closes above that moving average to start to establish a new base camp to move higher. What we don't want to see is, one, a reversal in the market. The backdrop of the market will always take precedent, and we don't want to see any sort of intraday reversal wicks coming back down and closing on lows. So, you know, this trade is intact. It's a slow mover. This whole market is kind of a slow grind mover right now. But again, a lot of earnings this week. This particular chart caught our eye off of our sector glance, and is a great illustration of how important the 200-day moving average is right now in many names and many sectors, and even the bigger ETF, bigger markets in general. The week before, I think, was SNV, a financial play. Again, grinding. The theme that you're going to see on a lot of these is they're trying to be trend reversals, coming out of a downtrend, moving sideways, but never really breaching the moving average of the 10 period and the 20 period, and then ideally looking for a day or two of a nice breakout from congestion. So SNV there is in the money, but again, slowly grinding higher. I don't know if I do this in correct sequence, but Occidental Petroleum doesn't look bad at all. It popped higher in 2 inside days of consolidation. This one very well could see some action tomorrow in the next day or two. We're going to look at the sector of the OIHs in a little bit. It'll make more sense, but that one is still in play. No harm, no foul. Most of these trade of the weeks that are open right now are essentially just mirroring this 20-day moving average that's coming up underneath. And if there is a close below the 20-day moving average on most of these trade of the weeks, that's where the stop out is going to occur. But until then, you know, any little decent touch and then a bounce back off of it is fine. And a lot of these are kind of touching and bouncing back off and not closing anywhere near lows. So that's a good one. GDX has been around for a few weeks now, but it's certainly doing very well. We're going to look at sectors again, and this is one of them that's really hanging in there and might be doing very well. Again, this is going to go on the heels of, I don't want to get too far ahead of myself here, but you know what, there's some crosswinds, whether it was the AI crosswinds of not firing off, whether it's the crosswinds of what Andy showed you in the volatility VIX. Well, the treasuries and the gold market, they're not really having any of this market climbing higher stuff. People are still buying gold and treasuries and some of the defensive stocks in the past. So something's got to give on all that. We'll see. But in the meantime, GDX was a prior trade of the week from last month, doing very well. And then lastly, I think X Steel continues to grind higher. So this looks just like so many of the others. Again, that rising 20 period right there will continue to be the downside stop. Stop to the penny, to the actual price is up to you guys, but that's what I'm going to be continually looking for. And that's kind of what we've got. I don't think I missed any of them. I had them listed here. Let's see.
I think you got them.
Yes, actually, pretty much got them. All right, so this next one is a quick demonstration for some of the test drivers, because you still have a few days left, as to how to use the back testing if there's something you would like to back test on. You know, for instance, we've been testing the Brokerage Plus module, and one of the strategies I have in here, you'll see, is called bouncers. It's a long strategy, and so I'm going to go ahead and take a look at where we are outside of Brokerage Plus, but using what we call the back testing module. So there's kind of the base strategy. It's looking for stocks that took out yesterday's lows and kind of bounced back through into today's range and hopefully followed through. There's no real volatility. Here's a perfect example. There's a stock right there. It took out yesterday's lows and then it starts to bounce back into yesterday's range. It's kind of an ebb and flow, just a real simple strategy that honestly I'm not really good at looking for, but I think it's a decent strategy for the bot to use. So I want to refine this strategy and make sure it's still working well. We have to use an A window for the new users. If you want to backtest a strategy, we have to have an event, which means the A window, because the T windows are nothing but filters. So the first thing we'll do is right click and backtest, and we'll open up the time frames, which I've already done. Pacific time, don't get confused. I'm in California. The exit's going to be a 45-minute hold. Risk management will risk 1% to hopefully try and make 3%. Stop loss will be a 1%. And let's go ahead and sample it all the way back 61 days, even though we'll get a lot of different market conditions. Let's see what we get. There's our summary. The first run gives us a baseline to kind of see, is it going from lower left to upper right? And if it is, then we can refine it doing a couple of simple tweaks. And that's kind of what I wanted to. Ooh, it's going slow, isn't it? There we go. It's trying to kick in. I wanted to demonstrate this for some of the new users because it's a pretty fancy tool. If you know what you're looking for, you can get this platform of trade ideas to give you back some pretty good information. All right, so there's a lot of trades going on. Looks like it's worked a lot better the last 30 days than it did the 30 days prior to that, but that's okay. We're going to work on this a little bit. Profit factor of only 1.2. We'd like to get that above 2. We've got 3,700 trades, way too many, but it's a flip. It's a coin flip, 50%. So it's ending up on the upside before commissions. Let's start with this. First thing I'm going to do is go to optimization, and we're going to try and optimize the price. I'm going to do $25 increments, and I'm going to see that the majority of the trades happening down here seem to be good up until about $149. So we'll set that as our maximum strategy. Right click and you can see that our maximum strategy is now set to not exceed 150 bucks. We'll say okay to that. And the next thing we're going to test is how well does this work at certain times of the day. So here's a heat map of my West Coast time. 7 o'clock is 10 Eastern. A lot of dark green here, but then it starts to fizzle out at 9:30 my time. Here's the lunchtime trade. and then it picks up again in the afternoon. Well, I only like to do this strategy in the morning because I think after lunch and during lunch it doesn't work as well. So we have a great heat map here to show us and confirm that. So we're going to rerun this from 7 o'clock to 9:30 and see what we get. So I will go back to my module here, and we will back test and run a new one, and we're going to quit at 9:30 my time on this run and see how that improves, in addition to capping the trades out at $149. That's the first pass. We can cut a lot of the fat out doing that. All right, so now we can compare apples to apples. We now have half those trades. We're down to 1,800. We're getting a little greener. The profits are getting better. The profit factor is getting better, and the win percentage is slowly getting better. So we'll take a second dive here on the optimization tab, and this time we're going to go to this other filters. This is pretty advanced, but we can really measure this against two things I like to look at. One is, what is the general market doing? So the change in the S&P, let's see if we can find, there's Dow change. It's probably going to be under S&P change. There it is, S&P change today. All right, so this is comparing all these trades versus the S&P change today. So it looks like most of the good stuff's occurring between the S&P being down no more than 2% for the day and no more than up 1.5% on the day.
Just
Looks
out of
like,
curiosity, Steve, why don't you put it on an interval of 0.25 and see what happens? I'm just curious to see if that's still full of green.
Interesting.
Oh, yeah.
Look at that. Actually, I kind of like this area right here because I would like the market to not be so negative. So we're going to set this as our bottom filter. Minimum S&P cannot be down more than 0.5%. Good on that one. And the S&P cannot be up more than 1.24%. So that's our backdrop. As long as the S&P fits those parameters, these filters are satisfied. The second one I want to compare this to now is the VWAP. VWAP, that's the dollar. Distance from VWAP is what we want, actually. Where is it? Distance from VWAP. So these are my two favorite. I'm going to go to a smaller increment here. I'll do maybe 0.3. And most of our trades are occurring down here. Let's do 0.5. All right, so yeah, I'm going to go ahead and just kind of take this as the minimum. There's a lot of trades in that minimum area. And then there's a lot of trades that are ending here with the VWAP being no more than 1.99 above. So those two configuration changes alone should give us something a little bit different now. Let's see. All right, so we're slowly working our way up. We're down to 1,100 trades. Now, there's many things we can go through. Again, I'm going to stop here on the optimization just to kind of show you the right way in which you want to go. But we can start to look at anything on here is a data point filter that you can compare to. If you'd like to know maybe a little bit more in depth, we can go back to the change in the S&P. We could maybe see what the last S&P change is for the last 30 minutes. Is there anything to, okay, well, we could actually refine this a little bit and say, let's add this minimum. We'll do this last one and that's it. And we'll add this maximum here at the green, dark green edge and see what that does for us. Just one more little tweak of market filters. What does that do for us? Hey, we're getting there. We're still going in the right direction, guys. So I think you're going to get the picture. For people who haven't seen this demonstrated before, we started off with well, we missed that one. We had over 3,700 trades, I think, and we whittled it down to 1,000 trades, and we're getting our win percentage up. There's certainly more work to be done, but what we just did there, guys, in a manual fashion is exactly what the AI is doing with a machine learning approach every evening. Back testing and reback testing and jiggering and changing filters and optimizing. So I thought that'd be a good visual, at least for the new test drivers, to see what's going on there. And then the beauty of it in the end is, for those that want, I can take the final settings that we just had that gave us those results, and I can save and share that for those that might want it. So I'll open up the chat window and I'll call it Bouncers Cloud Link. And there it is. All right, so that's it for just a quick visual, again, for knowing that the test drivers are in here, wanting to give them as much information as we can on what it is this program can do. Hopefully that made sense to a few people, and can take it to the next level. I thought we'd look at a sector glance here, and then from there I was going to set a few alerts that I have noticed throughout the day. And what this does is this brings up the feature of what we call our price alerts. And every time we do a test drive, we have a little contest called the Price Alerts Contest. And you probably got an email on that. There's a very detailed set of instructions on how you can submit no more than 5 untriggered price alerts that have yet to trigger. And at the end of the bell on trading on Friday, we will quickly jump in there and look at everybody's account, or everybody that entered, and look at their entry and see who has the best profit percentage gain for Thursday and Friday, because they need to trigger on Thursday. So this will also be a good benefit for those that are thinking about that contest. Just remember, you don't want to have your stocks triggering on Wednesday or Wednesday after market. They'll be disqualified. It's a 2-day event, so I'm going to show you here how to set some alerts once we like something. Let me clear this one out. Right-click and delete from our server that one price list. And we'll minimize this and come back to it. All right, what I wanted to do is just quickly go down a simple scan, a watch list here that looks at 30 different sectors to kind of see if we can find some things that are interesting. And remember, interesting to us is things that might be consolidating sideways, waiting for that right moment to push and break out. So let's see if we can find things that aren't too overbought. Well, this is the China ETF, and it's looking like it's had a couple good moves, so I wouldn't want to jump in that one. Now, retail, that's kind of interesting. This one's been going sideways, and I know because I've got my little cheat sheet list that some of the stocks I'm going to be picking are retail-oriented, so it makes sense to see this retail ETF here showing us a really nice defined 3-week wedge for the most part. You guys can see that, a good 3 weeks of data going sideways. The longer the sideways action, the better the resolution, the better the resolve it should be if it does break out to the upside. We'll see. So retail's looking good. All right, back to this one. We kind of teased you on this one. The gold miners, beautiful run last week and has not given very much back at all. So count this one as, sideways action. It's probably waiting for this 10-period moving average to come up and catch the action in the next day or two. The ETF here for gold miners is looking strong. So keep that one in the strong category. Semis look kind of like our general market. They've been expending their energy doing a grind higher, and they're going to run right smack into their respective 200-day. So I don't see a whole lot of opportunity in the near term on that one. Same with technology ETF, just a lot of expended energy being wasted coming up to its moving average, which is going to look like the Qs. All right, here's natural gas. I'd stay away from that. Solars, interesting, had a really nice breakout. Notice our line in the sand here, the 200-day, and how it correlates to some other sectors or some other stocks. This one is showing us relative strength. So the solars are definitely holding up in terms of the bigger picture. There's the Dow. We talked about the Dow being one of the 4 exchanges, one of the 4 indexes that actually is doing what the bulls want to see it to do. So that's a good sign. Home builders are running right smack into some resistance, the 200-day. So again, we're looking for sideways stuff. That's the IYR. The TLT, the treasuries are not selling off as the market goes to lows, but they're not really going anywhere either. They're just kind of making a lot of noise. GDX moved on me because the first one was the junior miners, okay? Gold, the ETF is, again, not having any of this market correction in stocks. There's obviously a contingency of people that are buying gold and gold mining stocks. We'll see how that resolves. The S&P we've been looking at looked right into its 200-day. Airlines are above its 200-day. Now this one is interesting. I really like the OIHs, and this is where we're going to stop and create our first alert. So look at how the sideways action is just slowly creeping. We've been touching this 10-period moving average here for 7-8 days straight. It's just riding it up. And at some point, we may have some good news or something might come out which will resolve this good-looking setup here. I call it kind of like the launching pad, or a bird in the hand is kind of ready to just kind of fly, getting its wings here. So I'm going to put a high in from today's high plus a penny. So we right click. We can adjust it by a penny right there. It goes 1758. And this will be a oil sector. Looks good. It might be good for a breakout tomorrow or the next day. But that's going to be the first of a few alerts that I'm going to set. One, to get out to you guys because they mean something, and two, as a demonstration to kind of show how to create a list for the test drive contest that we have going. All right, so we hit that. OIHs look really darn good. And again, the trade of the week, Occidental Petroleum will probably have a good move if OIHs have a good move the same day. Gold, we saw that. There's our agriculture. It's not really a tradable ETF, but interesting nonetheless. Steel, we looked at X Steel and AKS. Nice little coil here in the SLX. We could see a push higher in the SLX, so I'm liking that one as well. Energy is already broken out, kind of going sideways. We've seen that one. Healthcare has been going sideways for a few days. This one could get interesting. Keep an eye on healthcare. I think that might be it for this first list. There's the broker dealers, don't look bad either. The IAI and XLF, a real tight range as well. So financials look decent. The OIHs look decent. Retail looks decent. So those are a few of the things that I'm noticing after today's action for sure. So we did in fact set a single price alert on OIHs. So what I want to do now is finish setting a few more price alerts, and then we'll open it up to Q&A if people have some questions, especially the test drivers. I've already gone through in the interest of saving some time, but the first one is called Let's Go Fishing. This is Andy's scan. It looks for stocks that are breaking their downtrend, kind of like everything out there right now looks. But the kicker is they've got nice balance sheet. They've got decent fundamentals. These are stocks that are good companies. They're not hemorrhaging money. They're not on their way to bankruptcy. They just have suffered technical pullback. So from this list today, I've got a couple, and again, they're both retail, as I teased you with earlier. So Tiffany, really nice sideways action, a lot of bottoming tails. This thing looks like it's getting ready to do something. I'm going to go ahead and just put an alert back on the high of this recent back here. So 90.40 is going to be our target level. Right click, 90.40 is what we want. And we'll go ahead and set that alert. Blue line shows up on the chart, and it will stay as such until it triggers. And by the way, if you're not aware, when it does trigger, it will pop up on my screen like that. And one more step you guys can do is you can right click and go to actions, and that will allow you to make sure you hear a sound, text to speech, however you want to set up your sound. So you'll get a sound alert and a visual alert over the splash screen. All right, the next one, derived from Let's Go Fishing today, is also a retailer, Best Buy. Look at that, that's pretty juicy right there, I think. Really tight sideways range. Let's go ahead and find the high here, 59.54. That looks like it's going to be it. Nope, 59.60 today. So today we're going to go to 61. Right click, adjust the price to 61, and we'll go ahead and set that as an alert too. Again, this is the kind of stuff I like. That hits a level and goes sideways. It's kind of just looking for a crack in the ice there. See if it resolves itself. So we'll put that one back on the shelf, and then another scan that I found a couple are, again, looking for reversals of downtrends, but also have a high short float contingency in there that might help drive a short squeeze. And two of them that stuck out to me, one was Home. All right, so this is kind of a nice cup and handle bottoming formation. If it can get through, these recent highs, I'm just going to call it, let's see, that's going to go back there. We'll call it through today's highs. Maybe we'll get some follow through. And then lastly, from this one, I found looked interesting. Again, just continuing to try and beat up against this level, which it looks like it breached on the open today. And then it came back and kind of gave a little bit back, but for the most part, it's still kind of closed right at or above its little breakout there. We'll go ahead and pop in a new high from today's high. We'll call it 803. And so now that we have 5 price alerts, this is what your price alert window should look like. And for those of you who are going to be sending in your code for the contest, you should have 5 alerts that say working. Again, these cannot trigger today, tomorrow, or after market tomorrow. To be eligible for the contest, they have to have triggered on Thursday or Friday. So from here, for those that are going to attempt to submit a submission for the entry, you copy and shade all 5 of them. Can't exceed 5 for the contest anyway. Right click and share. So not only am I going to share this code right here with everybody in the room, and for those of you that receive that code and open it in the cloud, these actual price alerts will show up on your price alerts, and so they'll all trigger at the same time if that does in fact happen. So I'll type in here price alerts, cloud code, and enter. And the copy paste enter is what you're going to be putting in for the contest entry for those of you that are entering that contest. So get your 5 alerts together, make sure they don't trigger too soon, and scrape all 5, copy all 5 to the cloud, and then you paste in to the contest entry form. And any questions?
No, you covered it pretty thoroughly.
I think we're at the point here where we saved ourselves a little bit of time. If people that are test drivers or anybody for that matter has any questions related to trade ideas, we can do so. Now is the time. Even if you want to look at a chart, we can do that as well. Sometimes we'll do that, but open the floor to the audience now. And like I said, we saved the last few minutes for some additional questions if somebody has some.
Got to be some out there. We have a decent crowd. Yeah, good crowd today.
Well, we did make ourselves available earlier as a group, so I'm sure some of these people, thank you, Waleed. Yeah, the channel bar, Patrick, good question. So obviously, a lot of the stuff I was doing here is pretty intense. It's not something you can learn in a day. So what we did was we created what's like a channel surf where we've got some themed channels. So I can go into those right now. For instance, if you're somebody who likes momentum stuff, the Alpha Predator channel right here is a great momentum channel. You see I've left my default layout and now we're into a different layout here. But this is stuff that's designed to be pre-created for you. So you don't have to build everything from scratch. So the theme of this channel is Alpha Predator. These are momentum stocks. These are things that were definitely in motion this morning, that were doing things on volume. Click that first one right there, and here's the daily chart on that one. Here's the intraday chart on this one. These are things that were definitely in motion today. If you like to look at options and see what stocks maybe are doing unusual options activity, we have a channel for that. What's really popular, there's the options channel. What's really popular is this one, and we made it kind of like a palette by design from some of the other guys here at Trade Ideas. For instance, there's one called Extreme Volume High-Low Pro, and this is another great one that will track the action throughout the day. And so a lot of times when people will see something on our website, on our desktop at a webinar, they'll say, well, how can I get a copy of that one? Or how can I get a copy of Pack Leaders? Or here, let's go fishing. We talked about this one a minute ago. We got some of our alerts from this one. Well, you could say, okay, I like this let's go fishing. That made sense what Steve was talking about. Stocks that are breaking their downtrend but are still solid on the balance sheet and not a lot of debt and what have you. They can go here, right click and save to my cloud. The reason we want to save to the cloud from this channel is because you can't make any changes to this channel. It's just a place to kind of go shopping and find something you like. Here, while we're at it, we can take a copy of Extreme Volume High-Low Pro. And then so when we go back to our normal layout, load layout, most of the people's normal layout is going to be called this one, the default. When we go back to this is where we were before we left. The ability to go file, load from cloud. We can come in and here's Extreme Volume High-Low Pro from channel 4. We got that. I can load that one. And the one before that was Let's Go Fishing. There it is. I can highlight and load that. So this is a way in which you can go to the channel, find what you're looking for, and then bring in individually these scans into your workspace using the cloud. Do you have a video or help explain each channel? We do have, I believe there's a document, Patrick, and anybody else that's interested. Yeah, you can send an email to info@trade-ideas.com and request that document, and there's something that can be given out as a thumbnail to kind of talk about what each channel is looking for.
Mm-hmm.
Surge channel, that's going to be stuff where volume is exploding into a stock that might have been once quiet. Low float, some people like to play stocks that don't have a lot of shares in circulation because they move quickly, a lot of action there. So for the most part, the channels are designated with a particular theme.
I'm going to drop TI University in there, Steve. So for the person who just asked about what's the best way to learn?
Yeah. The odds maker, we did just do an example. That's the back testing that we did about 15 minutes ago. Again, this webinar will be recorded for tonight, so you can go to our YouTube channel and go back and review it. But the link that Andy's dropping in there on the third and fourth day, we get into back testing in the odds maker. A lot more information for sure. And yes, Waleed says, don't forget to save your layout after adding your scans. Once you've gone to your cloud and loaded from your cloud, save that layout. Otherwise, you have to keep going back to the cloud and getting it. Is there much updating of the Channel 4? There hasn't been much updating of Channel 4, David. Not that I know of.
We need to do that at some point. We will. So I dropped the TI University into the chat window. Okay, so somebody asked, Anna asked how to start to learn Trade Idea Platform, and that's the best thing. It's TI University. We normally hold it live each week, but of course this week we're doing the test drive. But we have them all recorded on our YouTube channel. So that's a playlist you can grab and watch each one of them, 101 through 104.
And the same goes for Jeff, who asked about what is odds maker. How does odds maker work? It basically goes back and looks in past time what alerts were triggering and what alerts were being satisfied in events, and then calculates what would have happened with hold times. It's the precursor to everything that Holly does. So again, there's more information on the replay of this webinar this evening or tomorrow morning when it gets uploaded, and certainly in the link that Andy dropped in version 301 and version 401. There's a lot of in-depth discussion on the odds maker and how to use it, how we use it, and how it works.
Mm-hmm. And Scott also dropped in there, Trade Ideas, take you to a web page so you can sign up for the TI University for next week.
Yeah, we repeat that live every Monday. All right, we're caught up on questions. Anybody have other questions while we're here?
You're welcome, Waleed. Thank you. And Anna, thank you as well. And let's not forget friend. You're welcome, friend.
Indeed. Yeah, right. You go asking questions going once and twice. You guys are running out of questions on us. That's okay. How to trade volatility. I've been working on how to trade volatility. If you like, I can talk on that. I wonder, is Sean like to, well, how to trade volatility. A couple general rules. Be very careful in the first few minutes of the day. That's when it's most volatile. You have to expand your share size. If you're normally trading quiet stocks at 500 shares, and you're trading volatile stocks, you might want to downsize to 150 or 200 shares. You want to make sure that you've got a seat to sit in when the music stops. There's volatility and there's low float volatility. Low float volatility is even worse because there's not as many waypoints to get out when you're wrong. So there's many different ways to answer that. I choose no longer to try and battle volatility. I like to just pull way back and be a swing trader, and just note that and know in the back of my mind that the worst volatility is always going to be on the open. As the market bell rings and the data and fire hose is turned on, you got orders being matched and stop orders being run, and don't get me started on that. So just avoid the first 15 minutes of the day if you can. Try and find the stuff like on that extreme volume high-low pro. Find stuff that showed volatility on the open. It exploded and then it kind of went to sleep and maybe went sideways for a little bit. Well, a lot of times we can catch some secondary moves, but just trying to gauge the insanity in the first few minutes is a fool's game. And that includes people even trying to back test and try and find sense of things that are happening in the first 3 minutes of the market. But the back testing it's not going to be a true gauge of what's really happening in the real world. There's just a lot of volatility in the first few minutes. And that's all I have to say about it, unless Andy has something to add.
Well, he came back and he said he's talking and speaking more about strategies for option strategies for volatile stocks. Yeah, you're probably best to talk to Sean about that. I don't. When I do trade options, it's very basic. Puts, calls. I don't do the exotic stuff. I know you. There's a way to. Mm-hmm. To play volatility. Some people, that's all they do is play volatility, but it's not a game that I ever got into.
No, the only time I like to use options are when I'm pretty sure the stock's going to go. I'm just not sure when. So you buy a little time. Okay, difference between trade ideas and vector vest. I don't know. I've heard this question before. I don't think vector vest is monitoring the market in real time. The beauty of trade ideas is all the filters and events can be bolted together and created to a custom fashion, and we can tell when those events are happening in real time. I'm not familiar with vector vests other than they had some weird commercials about 10 years ago. Other than that, I don't know.
Yeah, I think vector vest is more of a kind of a green light, red light approach, where, I'm personally, I just think there's too many variables in the marketplace to make it so, simple as a green light, red light.
The question is, in swing trading, is it a good method to set up stop losses by the value of the 10-period SMA? I like to do that, Fernando, either the 10 or the 20. A lot of times they can bang on the 10 or pick on the 10-period during the day, and then it spooks you, and you get out only to see that it closed well above the 10-period. So that's why it's a hard pill to swallow sometimes, but I like to say, in the swing trading world, you really shouldn't be letting tick-by-tick trades get you out of the position. So I like to see if it's going to close up by the end of the day. Now, if it's drilling through and trading on lows and making new lows and the market's down 2%, that's a different story. But if the market's up and you feel like this is just kind of a stop hunt and it's not a lot of volume and they're just kind of testing to see, where the buyers are, sometimes you have to sit back and wait. And so the answer to your question is yes, I like to use that, but I like to wait for a closing price, either on the 15-minute or even on the daily, using that 10-period SMA. Wait for a confirmation, a closing price.
It's tough sometimes, though. You really be a true swing. If you're going to trade off the daily, you need to let each daily candle close. But I'm one that if you've been trading long enough and you got a good feel and you've seen things over and over, I will definitely get out during the middle of the day if I just don't feel like the trade is lining up anymore.
Yeah, maybe a similar type company in the same sector all of a sudden comes out and warns. That's not something you calculated going into the trade, so that could change everything. There's always variables, but yeah, a good rule of thumb to answer your question is I like to have a close below those key moving averages to signal that the movement is over in a swing trade or time frame. All right, good question. Any more? Do you get any feel that certain stocks are particularly picked on for those early morning? I don't know if particular stocks or certain types of setups, things that we can't see on the surface, but I can guarantee you that the stocks where people are getting a little impatient and tired, and they come home and they have a glass of wine and they log in and they put a good till canceled market order stop at this price. You get enough people doing that, and all of a sudden the next morning, as soon as the bell rings, Citadel and Virtue and the other market making firms, Bernie Madoff, are going to pick on you. So there's no real set setup other than what they see. They see the whole complete chessboard. You know, do I mean your broker's selling you out? Yeah, that's exactly what I mean. They're selling you out. They're making money on giving up data, and part of that data includes your good till canceled stop order. So that's a good reason not to use those. And it's also a good reason as to why the first 15 minutes of the day are incredibly volatile, because there's a lot of that going on. But there's no real type of stock or type of setup that's immune from that, David. It's just a matter of when everybody starts getting impatient and throwing in good till canceled stop orders, those market making firms see that like 10 pins lined up in a bowling alley.
And you would think that it would not happen in really liquid stocks, but I've seen it happen there. I'm talking about stocks that trade 15 million shares a day. You're thinking, oh, there's enough liquidity. No, a lot of these things are, I believe they're orchestrated, by the players. And yeah, if they feel like it's to their advantage to do some stop hunting, they will do it. So, and Steve's right. There's no one stock is immune to it. That's for sure.
Yes, all right. Well, it's top of the hour. I think we're a little bit talked out here, so let's bring in Scott and put the slideshow back up, and we'll be back at you guys tomorrow for sure.
Unmuted.
Let's go ahead and bring in Scott.
Thanks, guys. So we are in the middle of our test drive. You still can sign up if you're not yet a part of it anytime between now and Wednesday midnight, and you'll still get 5 days. For example, if you sign up Wednesday evening, you'll be able to do the test drive through next Wednesday, so you still get 5 trading days. So don't hesitate to do that, so you can try out premium. Just go to trade-ideas.com/test drive to get in it. We do have an ebook that both Andy and Steve contributed chapters to. Oh, well, first the podcast. I guess that slide order is different on today's. So Trade Ideas Podcast, we have new episodes coming out on Fridays. Search for Trade Ideas Podcast wherever you listen to podcasts and add us as a subscription. And you can also check out our back issues. There's some good stuff in there with guests. As I was starting to say, both Andy and Steve contributed chapters to our ebook. It's been very timely this year, and it's still of great use. It's 5 ways to win in a post-BTFD market when you can't just buy the dip. You need some strategies, so get that ebook, trade-ideas.com/ebook. Just put in your email address to get the download link delivered to you. We have a code that's good this month, and that is Get Holly Ideas, and all caps, just like it is on your screen because it's case sensitive, and that lets you save 15% off of starting any of our subscriptions. You can also use this to upgrade from standard to premium and save the same amount. So if you're ready to do that upgrade or get started, just go ahead and use that code today to save. Any questions at all about the webinar or the product, email info@trade-ideas.com. That goes to our help desk. It's the best place to send any of your questions. You can follow Steve on Twitter at TodayTrader. We're also at Trade Ideas. Facebook.com/TradeIdeasPro is the page to like on Facebook, so you can share what we post with your friends. Again, that's info@trade-ideas.com is the appropriate place to send your questions. We'll have a recording of this up later on tonight or tomorrow. You get an email update when that's available, telling you how to find it. Thanks, Steve and Andy. Thanks all that attended.
All right. See you next time.
Yep.
All right, guys. I'll see you on Thursday.
Later, everyone.
Bye-bye.